I've spent the last year and a half fine-tuning a trading strategy that, well, worked okay, but never quite hit the mark. Then the ChatGPT-5 update dropped recently, and everything changed overnight. I asked it to take $100 and turn it into 10,000 as fast as possible. And at first, it gave me the same boring advices we've all heard a million times. Trade volatile assets, use technical analysis, stay disciplined. Not good enough. So I pushed harder, told it to build the ultimate strategy using a viral AI-powered TradingView indicator based on machine learning, with one goal: $100 to $10,000 in the shortest time possible. The results? A surprisingly solid plan that I fine-tuned to make even better. And today, I'm putting it to the test with 100 trades on Ethereum's 3-minute chart to see if it really delivers. The strategy uses 3 free TradingView indicators. And fear not, if you're on the free plan, make sure to watch the entire tutorial until the end, because I'm going to reveal different approaches for you, my dear friends, to use more than just 2 indicators on the free plan, so you're going to enjoy it. Now, I'll explain how each one works as we add them. First, we'll load the machine learning KN-based strategy. Huge thanks to the creator for putting this together. This strategy works by looking at historical market data and predicting where the price might head next based on patterns it's found. KN stands for K-nearest neighbors, which is basically a classification method that figures out the category of a data point by checking the closest points around it in a feature space. For trading, KN can classify whether a price is more likely to go up or down by analyzing its historical data. First, you gather and process past prices into something called a feature vector. This vector can include technical indicators like moving averages, RSI, and momentum tools. Then, the KN algorithm looks at those vectors and assigns them to an up or down class. The great part is that this indicator doesn't repaint. The only thing to remember is you have to wait for the candle to close before confirming a signal. It's super easy to read. Blue labels mean buy, pink labels mean sell. The opacity changes based on how strong the signal is. But we can't just rely on this one alone. It will still produce too many false alerts. That's why we add the next tool, the EMA ribbon by Dominic Ossoletti. The exponential moving average ribbon is a group of EMAs stacked on top of each other on the chart. It's used to spot the direction and strength of a trend. The ribbon is built by layering EMAs with different time periods, giving it that ribbon-like appearance. When it slopes upward, the market is an uptrend. When it slopes downward, it's a downtrend. The ribbon helps us decide on potential buys or sells by checking both the trend direction and where price is compared to the averages. The EMA ribbon also comes with built-in buy and sell signals, but since we already have those from the machine learning indicator, we'll turn them off. Looking at the chart, the ribbon filters out a lot of fake signals, but not all of them. That's why ChatGPT suggested adding the RSI for extra confirmation. Most traders know the relative strength index, or RSI, measures the strength of a price move and runs on a scale from 1 to 100. Above 70 is considered overbought, below 30 oversold. For this setup, we make the RSI more sensitive to get better entries. Go into its settings and change the upper band to 60 and the lower band to 40. Now, here's how to enter a long trade. First, price must close above the 200 EMA, and the EMA ribbon must also be above it in green. Next, price should pull back into the ribbon without closing below the 200 EMA. The machine learning strategy then needs to print a blue label. Lastly, the RSI should be oversold before that buy label appears. all these conditions line up, open a long position. Put your stop loss below the latest swing low and set your take profit at twice the risk. Once you've hit 20% of that target, move your stop loss to break even. For example, if you're risking 5% to make 10%, when you're up 2.5%, lock in the trade by adjusting the stop. Here's another example. The market is in a clear uptrend. The RSI dips into oversold territory, telling us when we can buy at a discount. Then the machine learning prints a buy label. We follow the rules, place the trade, and let it run. For short trades, just reverse the process. Wait for both the price and ribbon to drop below the 200 EMA, and the ribbon must be red. Price should pull back into the ribbon without closing above the 200 EMA. The RSI must be overbought during that pullback. After that, wait for the machine learning to confirm with a sell label. Important note, don't take the trade if the RSI is oversold when the sell signal appears. Only enter if every rule is met. Place your stop loss just above the recent swing high and aim for twice the risk. Move your stop to break even once you hit that 25% profit mark. Now, for the backtest results. Starting with $100, after 100 trades, the account grew to $19,527. What's interesting is this strategy doesn't even have the highest win rate I've tested. The difference is it carries more risk. Risk per trade was set at 5% instead of 2%. Higher risk means bigger drawdowns, but also bigger rewards. I'm not saying you should always risk 5%, especially if you've got a big account. But if you're trying to grow a small one fast, it can work. Just make sure you forward test it on a paper account before going live. That part is crucial. And now, as I promised you earlier, make sure to check the recommended videos on your screen to learn different approaches to use just more than 2 indicators on the free plan of TradingView. And also, the other recommended playlist is filled with different approaches to turn any trading strategy, including this one, into a bot with alerts so it does the job for you 24/7, all for free while you're not around. Anyway, thanks for watching. Till next time, bye-bye.